Okay, friends, welcome to yet another video where we will discuss both Nifty and Bank Nifty. Now, this is the daily chart of Nifty that I have on the screen. If you recollect in my last video, which I posted, I think on Saturday, I had said that I don't see any major downside for both Nifty and Bank Nifty from the current levels. And I said that 19,250 odd is a good support for Nifty. Now see the low for today. It is 19249.70. So again, Nifty bulls have held the 19,250 support. Now this week we have the monthly expiry on Thursday. So I had mentioned in my last video as well that we could have an extra dose of volatility in our markets because of this. Now the day's high for Nifty was 19366 and we have closed at 19306. So almost 60 points we have come off the highs for the day. Now what I think is that in this current expiry, it is likely that Nifty and Bank Nifty both are going to be range bound. Now, I don't think Nifty bulls are going to find it easy to scale this level that you see on the chart. Okay, so this is approximately 19,380. This was the previous support, and we have broken through that support and we have held onto the 19,250 support. So Nifty is likely to be range bound between 19,250 and 19,400 approximately for this particular expiry. I had mentioned in my last video that shorting is not a good idea at these levels, primarily because we have already corrected off the lows and 19,250 is a reasonably good support from where Nifty bulls have been bouncing back each and every time we reach there. So currently, yeah, sorry friends, I just had a short interruption. Any case, so continuing with our Nifty analysis, I said that Nifty is likely to be range bound, no major moves likely to happen on either side. 19,250 remains the support for bulls, and even in today's session, they have held on to it. So I don't think you should be placing big bets at this level. I also suggested that you can consider going long, and as a hedge, you can just either short the call or have a long put to protect your long position. I still maintain my view. I don't see any big move happening right away. Probably until this expiry, we are likely to be range bound between 19,250 on the downside and 19,400 on the upside. So this is for Nifty. Now let's check the Bank Nifty chart. Now Bank Nifty also, as I said, is not really a shorting candidate, just like Nifty. You can refer to my last video. I have been uh, suggesting that these levels are not the right levels to short either the Nifty or Bank Nifty. Now, even for Bank Nifty, I think a range bound move is likely. Now, in today's session, Bank Nifty is almost 250 plus points positive. So, bulls have again managed to claw back from 44,000 odd levels, which we had hit uh, on the Friday. So if you see Friday's low is around 43,983. So I said around 44,000 odd level looks to be a good support for bulls. Now, if you see on the chart, this level of 43,932, okay, which I have marked with a dotted line. Now, this has held as a support in the past. See over here, this particular zone. So it is likely that bulls are going to hold on to this level until this expiry at least. Again, in my opinion, we should. Yeah, friends, I'm sorry for yet another interruption. It's really something I could not really avoid. Any case, let's focus on the bank Nifty chart yet again. So, friends, as I was saying, in this monthly expiry, I do not see any big moves happening on either side. Bank Nifty on Friday's session, it had made a low of approximately 44,000, and I had mentioned that we are unlikely to break 44,000, and we are unlikely to even make a big move on the upside, and that is what we saw in today's session also. So for the moment, both Nifty and Bank Nifty look range bound. Now, what is the right way to trade this market in the current scenario? See, I think there are two things you can do. You can either sell both calls and puts for Nifty and Bank Nifty. So I was recommending if you can do a straddle, or maybe you can simply be long on the futures and short the call. That I think is another option. Now, every trading strategy carries a risk, and you have to know what is the degree of risk you have in your position and how you are going to be managing it. So, keep a manageable position size and then make a trading strategy with that position size in mind. See, the problem with selling calls and puts is that in case there is a big move in the market, you are likely to incur losses. So, you will have to hedge those also by going long in another set of call and put. So every strategy, as I said, has a risk element attached to it, and you need to be able to manage that risk. I don't think we need to be bearish on this market at these levels. I have been saying this even in my last video. The market has already corrected from the highs, and we are near support levels which have been respected in the past. So shorting at these levels, in my opinion, is not a good idea. Anyone and everyone can always be wrong about their opinions about the market, including me. That is why we always need to have a good risk management system in place. So manage your position size well, manage your risk very well, and trade with whatever view you have in mind with a proper strategy. So friends, this is all for today's video. I wish you good luck, stay safe, and trade with a good risk management strategy. Thank you. See you in my next video.